Now on Overnights,
I believe in reason and common sense.
Leith Van Onselen from Macro Business with the Treasury of Common Sense.
Common sense never goes out of style.
The national accounts for the third quarter of the year were released yesterday by the Australian Bureau of Statistics, and this is actually quite important because it gives us a good snapshot about where we are with the economy, and it doesn't paint a rosy picture. We talk about economic issues with Leith Van Onselen every Thursday morning from Macro Business. G'day, Leith.
G'day, Clinton. How are you?
I'm good, mate, but the economy's not so good.
Mate, those accounts yesterday that came out for the third quarter were an absolute shocker. So they basically came in well below pretty much every economist's forecast, and also came in well below the Reserve Bank's forecast. So just to recap, the economy grew by only 0.3% in the September quarter, and it was up just 0.8% annually in the year to September. So just to put that into perspective, that was the weakest annual growth rate Australia has had for 32 years. So the lowest, the weakest since December 1991, as we're coming out of the recession we have to have, all the way, back when Paul Keating was Treasurer.
Yep. And
the 0.8% annual GDP growth is right at the bottom of the OECD league table. So the OECD is obviously the 30-odd most advanced countries, and we're sort of towards the bottom end now. And the median increase in GDP over the year was 1.1%. We're at 0.8%, despite the fact that we've got this, unbelievably high population growth that most other countries don't have. Now, turning to that, the economy in aggregate, matters a bit, but really what matters to us is what our slice of the pie is. And the per capita GDP growth, so the slice of, the share of the economic growth that's shared out amongst us individually, declined by 0.3% over the quarter. Now, that meant that Australia's per capita recession has now run for a record 7 consecutive quarters. So the economy in per person terms, the slice of your pie, has been shrinking for 7 consecutive quarters. And it's fallen by 2.2% since the Albanese government came to office in the June quarter of 2022. So, and if you actually break down the numbers, it gets even worse, Clinton, because all of Australia's GDP growth came from the public sector. So private demand, so once you strip out the public sector spending and those sorts of things, the private sector economy, which includes spending by consumers and businesses, etc., that was dead flat over the quarter and negative once you adjust for population growth. And over the year, the private sector, we call it private demand, only contributed 0.5% of the economy's domestic demand. So it's a little bit different to GDP. Whereas the public demand contributed 1.2%. So we've basically got this, sick economy that's been driven by public spending and population growth. And the area that's actually the weakest is the one that you and I live in, which is the household sector, which has actually driven this decline in per capita, this per capita recession. And real per capita household consumption fell by nearly 2% over the year. So it's an absolute shocker. Just a few other little tidbits that are important. Australia's productivity growth, so that's how much the economy produces per worker, so labour productivity, has now fallen back to December 2016 levels. So, we've given up, about 8 years of progress there. And this decline in productivity has been driven mostly by the non-market sector. So effectively, the government's taken over the economy. It's spending big on, obviously spending a lot of money where most of the jobs growth, nearly all the jobs growth has been in the non-market economy, which is basically the government-aligned areas like the NDIS, etc. That's all experiencing falling productivity growth. And as a result, the productivity growth across the economy has shrunk. We've gone backwards 8 years. And there's pretty much only one upside for this entire release, Clinton. I want to give a little bit of ray of sunshine, I guess. It's that the stage 3 tax cuts did support a modest boost in real per capita household disposable income. So that actually rose by 0.2% in the September quarter because we all got tax cuts, which meant we had a bit more disposable income. Although it was still down 0.1% year over year, and it's still tracking nearly or around roughly 8% lower than it was when the Albanese government came to office in mid-2022. So even Australian households, our incomes have fallen by around 8% now since the Albanese government came to office. We've got a little bit of a boost from the stage 3 tax cuts. But no matter which way you cut this is an absolute disaster, this release. And what it basically tells you is that Australians are basically experiencing, or we're in the midst of a lost decade. The economy's, totally reliant on the public sector and population growth through immigration. And we've got disgraceful productivity. And what it means is that our material living standards are likely to remain, pretty poor. We're going to have a very weak rebound so long as we keep persisting with the same sorts of growth. Now, the only upside to this is that next week when the Reserve Bank delivers its interest rate, it holds its next monetary policy meeting. Later in the month, I should say. It's no longer the first Tuesday, but sort of mid this month. In a week or so, the Reserve Bank will hold its next meeting. And I still don't think it'll cut rates because it seemed like too much of a pivot from what they've been saying. But I think they'll do a dovish tilt, which basically means they'll start preparing for rate cuts, which means we'll probably get a rate cut in February based on this release, because this was an absolute shocker and it shows that the economy's travelling a lot worse than what the Reserve Bank was expecting, which means we're more likely to get rate cuts.
I'm just thinking what the political aspect is going to be, because obviously there's an election either March, April or May. Now, given this is such a long-term trend, this isn't the sort of thing that can be turned around in time for an election campaign. But what may well aid the Labor Party is an interest rate cut in February. They'll be able to spin that, won't they?
Yeah, absolutely. So I guess that's the silver lining here. I mean, they could sort of talk up, oh, look, we had some household disposable income growth finally, but really not much, and it's really just temporary from the stage 3 tax cuts, which will basically have washed out the next quarter. But certainly this does raise the chance massively of the Reserve Bank cutting rates earlier. So economists in the markets have tipped May next year as the most likely date. And I think after this release, I haven't seen any economist reports yet because it's all too early, but I think they'll all be bringing them forward after this. And I think February's looking very likely. Look, there still is an outside chance we could get one later this month based on this data, but I just don't think the RBA will want to flip-flop so quickly because they've been so strongly against it. It'll seem like a massive, doing a flip-flop 180 in one meeting, which is probably a bit too quickly, but they'll certainly lay the groundwork, I think, for a rate cut.
And having a look at the data on population growth within the national accounts, the government is not reaching their targets of cutting numbers, are they?
Yeah, no, they aren't. So it's quite interesting. So the official population data is only current to the March quarter of this year. But what you can do is, what us economists can do, or at least what I've done, is if you divide the nation's GDP by GDP per capita, you can get a population estimate. So it's the official population estimate from the ABS up to the September quarter. And what that shows is that Australia's population is still growing at a massive rate. So in the third quarter of this year, Australia's population increased by 168,000. Now, that's an annualised rate of 670,000. So if you times it by 4, that gives you an annual population growth rate of 670,000. And it was the third highest quarterly result in history. So it still shows you that population growth is running very high. It has come off a bit. But and Australia's population in the year to September, so once you sum up the last 4 quarters, it was 638,400. Now, that's down from a peak of about 660, but it's still incredibly high. And just to put that into perspective, that's the equivalent of adding a Canberra and a Darwin worth of population in just 1 year. And this comes off the back of the May federal budget's projection that net overseas migration would halve to 260,000 this financial year. But the data so far suggests that we are so far above that. And it also segues into the latest net permanent long-term arrivals data, which I ran through a couple of weeks ago, which was also the highest on record for the first 9 months of this year. So this promise that the Albanese government has said that they're going to cut immigration, significantly and bring population growth down is just not showing up in the numbers. Like it has come down a tiny bit, but we've basically descended from Mount Everest down to K2. So it's still incredibly high population growth, still way above projections. And what it tells you is the Australian Treasury Centre for Population is clearly incapable of accurately forecasting net overseas migration and population growth because we just keep exceeding it, budget after budget. Every single projection that's come out from the Albanese government, whether it's the mid-year fiscal outlook or the federal budgets, have all been so far undercooked. And it's come in so far above that. Now, the only bright side for the Australian Treasury is that it's only because of this ridiculously high population growth that has kept the economy out of a technical recession. So if we didn't have such strong population growth, we actually the aggregate economy, the overall economy would be contracting. Whereas at the moment, it's growing incredibly slowly, and we're contracting in a per person sense, which is just as bad. But at least from a headline, the sort of stuff you read in the papers, etc., it sounds better than it is because they're still running this massive population growth, and it's just not coming down nearly as quickly as they said it would.
And that should be an election issue as well. Leith, thank you, mate. A lot to talk about today. We'll catch up next week.
Yeah, thanks, Clinton. Speak to you next time.
Leith Van Oslen from Macro Business.